Yeah, good morning, everyone. So yesterday, US market saw some range-bound trade or marginally down, more of a profit booking and some concerns about the results. Even the futures of the US market were also down, mainly on account of Microsoft had given poor guidance for the fourth quarter, though the result was comparatively better. That has taken the sentiment down for the US market. And we had seen that in last few days, the US market came up from a low and is facing some resistance at the higher level. Apart from that, Asian market are showing some positive trend, though most of the market are still closed for the holiday. Japanese market are minor positive, and Korean market, which opened after a few days, is showing positive trend also. Commodity again, oil is indicating some decline. It is down by almost around $1.5 to $2, mainly on account of the inventory figure which is expected today in the US. So overall seems more of a sideway market indications. So we may see a similar trend in India also for that. Apart from that, the result will be the key driver for the stocks. I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note, and we are likely to witness some sideways momentum during the day. Yesterday, we have seen that the Nifty has touched the feet of 18,200 level and somehow faced a selling pressure at the higher levels and managed to come closing above 18,100 level, which gives some sort of a relief sign as long as Nifty has sustained the support of 18,100 level on the closing basis. Now going ahead, that 18,200 will act as an immediate resistance level itself. If it surpasses that level, then 18,270, 18,340 levels can be seen on the high side. Whereas on the low side, the first support is placed at 18,070 levels. Below that level, we might witness some profit booking which might be connected towards 18,000 to 17,900. So the view will remain cautious as long as Nifty stays below 18,200 levels. Coming towards the Bank Nifty, immediate resistance for today intraday purpose lies at 43,000 level. Above that level, we might see some movement into the Bank Nifty, which may take the Bank Nifty towards 43,250 to 43,400 levels. On the lower side, for today intraday purpose, 42,600, 42,300 are the important support levels we need to keep an eye on. Coming towards the Nifty Finance, 19,000 and 19,050 are the two resistance levels we need to watch it for today. On the lower side, 18,900 and 18,800 are the two crucial support levels in the Nifty Finance. So the overall view on the Nifty, Bank Nifty and Nifty Finance will remain cautious as three indices are trading nearby its resistance zone. If it's clear that levels, then only we can witness some buying into the market, or else since the tomorrow is a holiday, today we might see some profit booking at the higher level. So stay light on the long positions. If you're holding any longs, just hold with the fixed stop losses. That's it from my end. I request the derivative team to take call for this.
Yeah, thank you, Swati. See, on the derivative front, again, markets have been on the sidelines for quite some time, and nothing much has changed. Now we are on the expiry date today, with VIX being near the 13.6 odd levels, below the 15 levels, with budget approaching. Also, open interest a bit high, PCR a bit low, so we can expect some amount of extreme movements whenever the Nifty hits a support or a resistance. So we are near the resistance of 18,200 odd levels. We reached there, some selling was seen, and so there is likelihood that Nifty can go toward that 18,000 17,900 levels in a quick manner, so that the VIX increases. The VIX only will increase when sudden moves come in. So be ready for the same. And whenever support or resistance are hit, be ready to book profits and reverse positions at those ends. Till the budget, we expect Nifty to remain in the range of 17,800 to 18,200 levels. From the stock specific front, at this point of time, only IT stocks are doing really well, along with some PSU stocks. So IT will continue to witness some buying. So for the next couple of days, concentrate on IT stocks on the long side, with the best being Infosys, TCS, HCL Tech, and Tech Mahindra. From the PSU stocks, ONGC, Coal India, IOC, these stocks are likely to do very well. So look out for the same. Yeah, that's it from my side. I like to ask the fundamental team to take over, please.
Good morning. So firstly, on the banking side, what we have seen in last 3 months, there has been a very strong rally, and basically now the Q3 results which are coming out are not being supported by, even if the result is good, the stocks are not moving higher. This is a sign of what we say sell on news. So this is probably the best quarter in terms of NIM expansion and loan growth. Going forward, the market is seeing FY24, where there could be some decline in NIMs from Q3 levels, and also some tapering off in terms of loan growth as the economic slowdown picks pace. Whereas on the credit cost side, there is not much further scope to reduce from Q3 levels. We are basically at the bottom in terms of credit cost. So from that perspective, ROE expansion, ROA and ROE expansion from Q3 level seems to be difficult for the sector as a whole. That is why we are seeing that stocks are not moving high even when with good results. Coming back to results, HDFC Asset Management result was in line with expectation. AUM growth was 3.6%. Revenue and EBITDA growth was around 3% respectively. Market share remains constant at 11% since last 3 quarters. Market share in equity segment has increased by 20 basis points sequentially to 11.7%. We are positive from long-term perspective. Home First Finance result has improved. Loan growth continued to be at 8% sequentially, 35% year-on-year. We saw similar growth in profits as well. Asset quality was stable, GNPA at 1.8 and net NPA at 1.3. ROA was also stable at 3.8%. ROE continues to scale higher with increasing leverage. It increased to 13.7% versus 13% last quarter. We are positive from long-term point of view. PNB Housing Finance result has improved. Overall loan growth was flat both sequentially and year-on-year, as the company is running down the wholesale loans while retail loans grew 6% sequentially. PNB has guided that retail loans will grow at around 16 to 18% next year. They form around 94% of the total loan book. GNPA has also come down from 6% to 5%. New MD is taking right steps and taking the business towards granular and safer segments of salaried housing, who buy apartments from category B and C developers where there is lesser competition. Loan growth will accelerate next year, and we expect ROA to remain at 1.6-1.7% range next year. And however, ROE will be lower at 9% due to very high Tier 1 ratio of 25%. So we are positive on PNB Housing. Stock is cheap and can do well. SBI Cards result was below expectation. Repeatedly, we are seeing the company disappointing on the NIM front, whereas OPEX continues to be high. Net interest income grew just 2% sequentially, and while OPEX grew faster at 8%. Thereby, PBP declined by 3% sequentially, and asset quality was stable. However, stock is at 25 times FY24, so still not very cheap with a bad set of numbers. So we are neutral on SBI Cards. I will also quickly discuss the follow-on public offer that of Adani Enterprises that will open on Friday. That is 27th, and it will close on 31st, that is Tuesday. Issue price is 3276 rupees per share. Initially, investors will have to give just 50% of the amount, that is 1638 per share. plus retail category will get a discount of rupees 64 per share. Public issue consists of fresh issue of 20,000 crores. Company will utilize the proceeds towards capex mainly for green hydrogen ecosystem and also for airports, construction of expressways, as well as repayment of debt. Company is basically an incubator of businesses in 4 core segments of energy, transportation, consumer, and trading of coal. Over the years, the company has seeded new business interests for Adani Group, developed them into self-sustaining businesses, and subsequently demerged them into listed companies, and thereby unlock value for shareholders. Since inception, it has incubated 6 businesses. We are seeing them listed companies such as Adani Ports, Power, Adani Transmission, Adani Green Energy, Adani Total Gas, and Adani Wilmar. So if you look at the business mix today of this incubating business, around 2/3 of the business comes from coal trading, whereby company also owns coal mines in foreign countries and imports coal from countries like Australia, Indonesia into India. As India is a coal deficit country where India imports around 20% of its coal requirements. Other businesses are operating and maintenance of airports, roads, and FMCG. However, the main focus will be on green hydrogen going forward. Company setting up green hydrogen ecosystem with an objective to incubate, build, and develop end-to-end integrated ecosystem for manufacture of green hydrogen, which includes one manufacture of renewable energy equipment such as wind, solar modules to reduce cost of renewable power. Number 2, production of renewable energy and hydrogen, green hydrogen itself. And number 3, transformation of a part of green hydrogen produced into derivatives like nitrogenous fertilizers, ammonia, and urea. Company is leveraging its facilities at Mundra SEZ to set up this ecosystem by being present across the manufacturing value chain from single location. It expects to benefit from reduced cost and efficiencies. We think that the company's leap into futuristic technologies like green hydrogen with heavy investments can propel the company into a new league if the technology becomes successful. Otherwise, it could also bleed the financials if the market dynamics shift in favor of other alternate fuels. Therefore, the business model involves very high risk with uncertain business outcomes. That is why we have given a neutral rating to this FPO. That's it from my side. Thank you.
Good morning. Sonata Software has posted above expectation numbers for the quarter. International IT services revenue came at $60 million versus QOQ of $57 million, although the margins have dipped to 21.8% versus QOQ of 23.5%. On the consolidated basis also, revenue has improved. Management indicates Q4 to be good. The company planned to invest 1.5% of whose leverage advantage will kick in second half of FY24. The company will have salary hike next quarter, which will have an annualized impact on margins of roughly about 1.2%. Stock is trading at a PE of 17.1 times FY24 EPS. Thank you.
Yeah, good morning. Jindal Stainless had its con call yesterday, wherein the management has guided sales volume to be in the range of 20 to 25,000 tons per month in FY24 on a standalone basis. With the removal of export duty, company will be looking to increase exports, which is a high margin market. Historically, the company used to export around 30% of its sales volume, but with the export tax being imposed last year in May, exports dropped to just 5% during the Q3. Company has already started to book exports orders, indicating improvement in margins going forward. EBITDA per ton guidance for the combined entity of Jindal Stainless and Jindal Stainless Hisar is rupees 19,000 to 20,000 per ton for FY24. So we are positive on Jindal Stainless. ISMT result was okay. Revenue came in at 586 crores versus 709 crores sequentially. EBITDA came in at 62 crores versus 63 crores sequentially. Although, however, margins have improved to 10.6% versus 8.9% sequentially. The stock is trading at EV by EBITDA of 12 times TTM earnings. Thank you.
Good morning. Maruti Suzuki announced its result. The result was ahead of expectation. Revenue came in at 29,044 crores versus an expectation of 27,609 crores, which saw marginal decrease of 3% sequentially, but grew by 25% on a YY basis, mainly led by higher than expected average selling price. ASP grew by 8% sequentially, led by a better product mix and price hikes, while volume grew by 8%. YOY. Gross margin came in at 27.3%, an increase of 40 basis points sequentially, led by RM cost tailwinds. EBITDA margin came in at 9.8%, which was marginally higher than the expected margin of 9.4%. The management reiterated its intent of gaining market share by increasing the share in UVs. In line with the said intent, the company is plugging the gap in the product portfolio. The company has launched 2 new products recently at the India Auto Expo, namely Jimny and Fronx, and has launched 4 new products, including the new Brezza and Grand Vitara in the last 2 quarters. The pending customer orders in the quarter stood at 363,000 units, of which 119,000 units pertained to the recently launched models. The company reported record dispatches through railways in CY22 at more than 3.2 lakh units. The stock is trading at a PE of 21.3 times FY24 EPS. TVS Motors announced its result. The result was in line with expectation. Revenue came in at 6,545 crores versus an expectation of 6,345 crores, which grew by 9% sequentially but grew by 15% on a YOY basis. Volume declined by 14% sequentially due to challenges associated with the export markets, while the realization improved by 6% QOQ on the back of better mix improvement and price hikes. Gross margin improved by 70 basis points sequentially and 80 basis points on a YOY basis to around 24.5%. EBITDA margin came in at 10%, which was in line with expectation. Benefits of softening commodity costs were visible in the quarter, with further improvement expected in the next quarter. Going forward, sharper focus on premium products will further aid margins. With an improving supply chain situation, the management was able to sell around 29,000 units in 3Q FY23 in its EV front, with plans of ramp up of EV production and expansion of network distribution. The company sounded positive about doubling of sales volume in the fourth quarter. Market share for TVS stood at 14.5%. The stock is trading at a PE of 24.6 times FY24 EPS. Thank you.
Good morning. Pidilite Industries Limited has announced result, and the result was below expectations. The revenue reported at 2,998 crore versus expectation of 3,129 crore. It has observed the weak demand in both rural and urban areas. The 5% sales growth on a YOY basis was delivered on a high growth of 24% in Q3 FY22. And based on the 9-month FY23, the consumer and bazaar segment and B2B segments both reported the healthy CAGR of 15% over a period of 3 years. The EBITDA margin came at 16.5% versus the expectation of 18.2%. The margins were largely impacted on account of moderation in input prices, and largely it was because of the high price inventory that they were having. The stock is trading at the PE of 60.5 times to FY24 EPS. Currently, the outlook remains neutral over the near term. However, we will continue to monitor the changes in demand patterns on account of input cost reductions and increased construction activities, which could be positive over the long term. The Sharda Cropchem Limited result is in line with expectations. The revenue reported at 1,017 crore versus the expectation of 992 crore. In terms of products, insecticides has observed the degrowth of 42%, while regionally Europe has observed lower demand for non-agrochemical products. However, overall top line performance was better with 16% YOY growth, backed by the favorable product mix, price realization and volume growth. EBITDA margin came at 19.1% in line with the expectations. However, it was below 22%, which was last year the same period. The margins were impacted due to the weak currency dynamics and the high input costs. The stock is trading at the PE of 10.6 times to FY24 EPS. The outlook is marginally positive on the company. The Colgate-Palmolive Limited result was below expectations. The revenue reported at 1,291 crore versus the expectation of 1,324 crore. EBITDA margin came at 28% versus the expectation of 29.1%. The margins were largely impacted by high advertising and selling expenses, which grew by 140 basis points on a YOY basis. The stock is trading at a PE of 34 times to FY24 EPS, and we are currently neutral on the stock with marginal upside, backed by its potential to gain the market share in oral care, led by its strong distribution setup and focus on innovation. Thank you.
Yeah, United Spirit has declared result. The result were below expectations. Volume growth was lower at 3.5% as compared to 8.3% in the last quarter and 3.7% last year. Gross margin though came off from the last year of 44%, but quarter on quarter it was marginally up by 100 pips. But the EBITDA margin came off very sharply because of the lower volume and lower leveraging. The EBITDA margin came in at 13.2%, but versus expectation of 14.9, quarter on quarter 15.5, and year on year 17%. So overall results are below expectations, though the valuation at 46 time looks reasonably okay for the United Spirit. I'll request commodity team to take up from here.
Yes, thank you, sir. Good morning, everyone. Today, in today's session, we expect some profit taking in gold and silver. One can sell gold around 57,000, 57,100, and international stop loss of 57,300. On lower end, 56, 850 to 56, 700 is the target we are looking for. In silver, there could be some pullback till 68,800. However, selling is recommended at 68,800, and prices on lower end can test 68,000 to 67,800. Weakness could be witnessed below 67,800. So in crude oil, yesterday we have witnessed some profit taking, and that could continue. So selling around 66.20 is recommended with a stop loss of 67,100. And on lower end, 65.50 to 6,500 is the target we are looking for. In natural gas, prices are continuously drifting, and there is no revival signal. So the weakness could continue as long as it is holding below 260. And on lower end, 240, 235 could be the possible levels where it can test. In metals also, expecting some profit taking. 780, 777 is the targets where we are looking for the support area. So selling with a stop loss of 791 is recommended. In aluminum too, prices have rallied, so a relief rally till 225 we are expecting. So avoid selling the counter, but on 225, 224 you can also enter long. If selling, then strictly maintain a stop loss of 228.50. Zinc also prices could correct till 295. So maintain a stop loss of 301.50. Yes, that's it from me. I'll ask Riya to take over from here.
Thank you sir. Good morning, everyone. So on the currency front, we saw that rupee has been on the depreciating side and is trading at around 81.66. Uh, this is because there is probably an intervention by the RBI that has happened in the forward market. There is also green bonds sale today. So we could see rupee a little bit on the depreciative side also in order to attract the foreign investment in the bond sector. So it could trade towards 81.83, 81.50. This is the trading range for today. Look out for these levels to take a directional position into the pair. JPY INR, like said, will remain under pressure as USD JPY is appreciating and is trading above 130 levels, and it could even test 132. So you could see the selling pressure to be continued into the JPY INR. Any take on the higher side should be taken an opportunity to go short into the pair. For Euro INR, look for a breakout of 89.04 in order to go long into the pair for a target of 89.40 with an SL at around 88.80. For GBP INR also a positive momentum could be witnessed, but it will be a restricted one. It could trade towards 100.78, 101.07. With you can go long above the level of 100.72 with an SL at around 100.40. It has not been able to sustain the level above 101.10. So once that level is reached, then you can take a reversal position. But right now, look for a breakout of 100.78 to go for a target of 101.08, 101.10. So that's all on the currency front. Thank you.